Our next guest is a little more upbeat on Zynga. Stephanie Chang is an analyst at Renaissance Capital, and she's in Stamford, Connecticut this morning. Hi, Stephanie. Thanks for joining us.
Thanks for having me.
Stephanie, Zynga does not, I should say it does make money. It is profitable, and it's got a business model that people understand. It makes sense to investors. But is that enough to keep the stock higher, not just on the first day, but a month in, 2 months in, 3 months in after the IPO?
I think so, yes. If you look at what Mark Pincus and his management team has been able to do over the past 4 or 5 years, I think he's done an impressive job of being able to scale his business. And as you mentioned, his business is actually profitable. And not only historically, but if you look ahead, he has several growth drivers that he's looking to exploit. That includes mobile and tablet and advertising. And I think he really has a long-term focus for the company, which will be able to support the stock price depending on where prices.
But a lot of people come back to the idea that Zynga is so heavily dependent on Facebook for its revenue. Something like 94% of its sales come from Facebook, even though it has this contract locked in with Facebook for the next 4 years. Isn't that a big risk for the company?
I think that is a concern for some investors, but as you mentioned, the agreement doesn't expire for 5 more years, so I think in the near term, at least, the relationship is stable. And in addition, even after the agreement expires, it's important to notice that Facebook takes a 30% cut of all virtual goods that are purchased on Zynga's gaming platform. So essentially, Facebook is able to generate a lot of revenue without doing any of the heavy lifting. So in my opinion, unless there's a material change to that relationship, there's no reason for Facebook to walk away.
Okay, so Facebook takes 30% cut, but only a small percentage of Zynga's users actually generate most of the sales. I looked at that. It was about 2.5% according to Arvind Bhatia of Stern AG. Isn't that a concern? Because it's stayed relatively stable. It hasn't actually increased.
That is a concern, and it is actually pretty astonishing that Zynga has been able to book over $1 billion in annualized revenue as of its most recent filing with such a small percentage of paying players. But Mark Pincus has indicated that he's confident in his ability to double that number over time. And I think both as Facebook users grow and Zynga's games become increasingly more popular, then that's a pretty conservative estimate.
All right, you mentioned some of Zynga's games. Farmville's growth has been slowing down, and Zynga admitted as much in the filing. And some of the new games have been less successful than others in the past, like Mafia Wars 2. What can investors get excited about in terms of the new stable of games coming out?
Correct. That is a concern. Social gaming is a hit-driven industry, so each company must continue to churn out blockbuster games in order to sustain growth. Zynga has mentioned that it has a full pipeline that it's ready to release over the next several years. In fact, it's the largest in the company's history. So as long as it can replicate its success and kind of be able to produce games that are equally as popular as Farmville and Cityville and its older games, I think that there's a lot of room for upside for Zynga's top line.
Is there any talk of Zynga perhaps buying other companies, other startups that may be developing games as well, mergers and acquisition opportunities?
Yes, I think the industry is seeing some consolidation. Zynga has actually made 13 acquisitions over the past 9 months. And after the IPO, it's going to have almost $2 billion in cash on its balance sheet and no debt. So that's a pretty attractive balance sheet going forward. I think it's in a good position to make some large acquisitions.
Okay, and let's just compare Zynga with some of the other high-profile IPOs that we've seen from tech companies recently. Groupon, for instance.
Sure.
Groupon had a good first day, but then after that, it hasn't been on solid footing. It's still not clear where it's going to end the year at, whether it's above or below its IPO price. Talk about the differences from an investor standpoint as well between Groupon and Zynga.
Sure. There are some similarities there in that they are both high-profile internet companies. However, the fundamentals of both their businesses are drastically different, and I think one key difference is the fact that Zynga is profitable. Its EBITDA margins are high, it generates strong free cash flow, and I think it's at a much more advanced stage in terms of scaling its business, which I think will set Zynga apart from other recent internet IPOs.
All right, Stephanie, last question here. What kind of investors will be attracted most to a Zynga? I mean, a lot more people know about this company than, say, a tech company that deals mainly with enterprises as opposed to consumers.
Sure. I think a lot of investors are attracted to that social networking space, and it's Zynga's ability to leverage Facebook's social networking platform to produce these creative and engaging games is something that's going to be attractive to a lot of investors.
All right, so Stephanie, you're looking for a price range of between $8.50 and $10 tonight, right?
Correct.
Okay, we'll be looking to see what happens there. Zynga pricing this evening, and we'll begin trading tomorrow under the ticker ZNGA.